Hello and welcome to the week ahead from the Financial Times in London. Coming up this week, talks around Syrian peace negotiations resume amid escalating violence in Aleppo. Second quarter figures from Germany's largest steelmaker Thyssenkrupp. And we'll see why the pressure's on Mark Carney ahead of the Bank of England's Super Thursday meeting. First up, the recent violence between rebels and forces loyal to President Bashar al-Assad in the Syrian city of Aleppo has been some of the bloodiest since the uprising began in 2011. Syrians finished a third round of peace talks in Geneva late last month and are due to meet again later in May. Negotiations stalled in April because of a disagreement over the fate of President Assad. With a Russia and US ceasefire now in effect and recently extended to the city of Aleppo, US Secretary of State John Kerry has stressed the need for all parties, including the US-backed opposition and government forces, to abide by the agreement.
We expect all the parties to the cessation of hostilities to fully abide by the renewed cessation in Aleppo. That means the regime and opposition alike. And we also expect them to live by the cessation throughout the country. And we look to Russia as a co-chair of the International Syria Support Group to help press, or not help, but to press, since they have the strongest relationship apparently with the regime, to press them for the regime's compliance with this effort.
While the uneasy calm is in place, talks next week will be led by France, along with officials from Turkish and the Gulf Arab states. As the opposition's main backers, regional powers are seen as key to the success of peace negotiations. Now to Germany's largest steelmaker, Thyssenkrupp. Despite a recovery in the global steel industry in the past few months, the company is still struggling to cut costs and mitigate the effects of last year's plunge in steel prices. In February, Moody's downgraded the steelmaker, warning that profitability will be weaker. While the group's second quarter figures, which will be released this week, won't reflect the recovery in prices, our Frankfurt correspondent Patrick McGee says that investors will be paying close attention to the update.
A key question is whether or not the company will be able to affirm its 1.6 to 1.9 billion euro guidance for 2016. Every analyst is actually below that figure right now because the price of steel has been low, weakening its profitability. For the same reason, Moody's downgraded the company in February. But a key question, aside from the numbers, is whether or not Thyssenkrupp says anything about what analysts think is happening behind the scenes, a proposed joint venture and then spin-off between its steel assets in Europe as well as the Dutch assets of Tata Steel in India. It's not really clear if the company will say anything, but certainly analysts will be looking for any hint.
The uncertainty around potential consolidation has had an effect on Thyssenkrupp's shares, with a fall from €22 per share last month to €13 per share. That's a 3.5-year low. Analysts expect underlying earnings to fall from €405 million a year ago to €389 million. And finally, Super Thursday is always a big day for the Bank of England as it publishes its latest interest rate decision, accompanying minutes and its second inflation report of the year. Uncertainty over the looming EU referendum in June is clearly having an impact on economic performance, as seen in the ream of April's poor data published last week. And as our UK economics reporter Emily Cadman explains, at this week's meeting, close attention will be paid to what the central bank's governor Mark Carney says about a possible Brexit.
Bank of England inflation reports are normally about just one thing, the path for interest rate rises. This week is going to be very different though. All the Ascendal press corps really want to know about is Brexit. There's a live debate at the moment inside the Bank of England about whether it should consider doing two forecasts. One, for when the UK votes to remain in the European Union, another in case the UK votes to leave. Regardless of what they decide, expect Bank of England Governor Mark Carney to be pressed very hard. Everyone's going to want to know more about his recent comments that leaving risks a scenario of slower growth and higher inflation, which for any central banker would be a nightmare.
And that's what the week ahead looks like from the Financial Times in London. See you again next time.